Happy New Year, traders. Welcome back, and it's good to be back. I want to know, what are your New Year's resolutions for your trading and investing? I already got a couple of things in the chat talking about how not to get wrecked. That's a New Year's resolution. Don't get wrecked. But I got a couple of mine to share, and we'll get to that in just a minute. A lot of things to look at, and as I said in the description, the saying of the stock market is, as goes the month of January, so goes the year. I'm going to back that up. While we're in the break listening to the music, I'm going to look up that statistic from the almanac. But it is true. I found it to be true. And so, what I've found from my history, my career over a decade of trading is I like to ease into January like an old man into bathwater because there have been Januaries that have made and they have been Januaries that have broken. And so you want to kind of really kind of ease into it, wait for something to set up to give you a sign. I didn't get that yet, but I'm going to keep looking, and I'll tell you what I'm going to look for here in just a minute. So hang out while people come in through the music, and we will be right back. Do, 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 do. All right. Good to see you guys. Thanks for stopping in. Hope you had a good week. Hope you had a good new year. And it's a new year, 2025. I hope you guys had a 2024. It was bullish in basically all the things from the stock market to crypto. I know it's been a little sluggish, is what it feels like, but overall, 2024 was a bullish year for basically everything. And we're just talking to I am GIG here, who asked, how not to get wrecked in his longs, and I think he was saying something about Apple wrecking him, and I'm just kind of curious, why would Apple? I know it pulled back today, it seems, over the last couple of days, but I mean over the last year, I mean Apple's been very bullish, and so here's the problem I think that you're having. you said that you were playing options, and I have just really over the year since I played options before 2020, except I always did monthly option contracts. And then around 2020, when people started getting into trading, I noticed that they started playing options, but they were playing weekly options. And I don't know if that's what you did, GIG, but um, that's not going to make you any money. I mean, it's good. People are going to post on Wall Street Bets about it, but over the years, as I've seen so many people wreck themselves with options, I've just tried to be the demonstrate and be sort of a good example for just buying shares. I mean, options give you this whole. Okay, so you've been the 221 since November the 265. Okay, all right. Well, let's talk about that. Okay, because you're getting close to the end of it. So I know I like that you took a little bit of a longer perspective in November. We'll look at that. But with options, you gotta get to a point where it's hard to know when to get out, and that's a pretty long term option, and you're not going to get it at this point. You probably reach the highest point that that option is going to get to. Seven contracts down to four. Well, you didn't do too bad, but the problem is, I wonder what would have happened. Let's see, in November. In November, you picked a great time, but how much did you spend on those options? And by the way, I got a lot of stuff to talk to today. We'll get to it in just a second, but he started talking to me before the program on Discord. By the way, if you're watching and you like it, make sure that you do the like thing, and so that I can help some more people. I want to talk about today. I want to talk a little bit about Bitcoin. I'm not going to stop talking about Bitcoin, but one of my New Year's resolutions did involve it, and I'm going to tell you about that in just a minute. I'll also tell you what my play is currently in the Bitcoin space, not in Bitcoin itself. I've got to talk about MicroStrategy a little bit. And I want to talk about Amazon. That's not really a political thing, but something that's going on with Amazon as a company that's kind of concerning to me. I've been a big bull on Amazon for a very long time, but yeah, we'll talk about that in just a second. It kind of segues from the Bitcoin discussion for some reasons. And talk about a trade that we picked up 2 weeks ago on the live stream. I love it when people bring symbols up to me. I write them down and I take them if I like them. And LRCX is that one. And so I like this to start the year. It's a nice weekly trade. I like long-term trades. I really, really do. And let's get back to Apple though. And we'll look at all those things on the topic. And if you have symbols to look at, make sure that you put it in the chat and we'll talk about it. Okay, so here's the thing. Okay, so you put in an average cost of 147. Let's call it 150 times 7. So you put in $1,000. Okay, cool. $1,000. All right. And I mean, what are you looking at right now in your profit and loss whole thing considered right now this minute as of this Friday? You know, that $1,000 that you put in, what's your P&L on all of that? So, because what I am wondering is if you had just bought, okay, if you just bought $1,000 worth of shares, you'd be up about 8%, and you know, that's not bad. I mean, it's not going to retire you, but it's a good investment. I don't know. With the ones I took in Fidelity, it doesn't tell me. Down 90 on the rest that you're holding. Okay, so what did you sell those others for? I mean, $1,000, you know, plus let's say 9%, it's going to be $90. So if you just bought the shares in November, even with the sell-off now, you'd be sitting at a return of $90. Plus, you'd be getting a dividend here pretty soon, and you wouldn't have to worry about these things expiring worthless here in a couple of days. You're already getting into you're getting into that sweet spot of theta decay. Not quite yet. Next week, next Monday, you're getting into that 45 day theta decay window. That's where option sellers really like to sell theta. Um, the thing I noticed when I was trading longer term options, and by that I mean 3 months or more, is there's going to be a point in the options history when you are very, very happy with your P&L. You're going to look at your P&L and it's going to be really, really nice. And that ends up being the best time to sell. Now, of course, that was probably December the 26th, the day after Christmas. Yeah, look at some stats for me. Let me pull it up. Let me pull up Apple here and look at the IV on it as well. But what New Year's resolutions do you guys have? I'll tell you mine in here in just a second. So I actually do like you taking the options. I do. I don't think you did anything wrong. You might have just been a little too ambitious with your strike at 265. They were probably really cheap, which I like. I like cheap out of the money options, but I'll tell you what. Let's do this. Let's do Market Watch. Hold on. We're gonna use. We're gonna use Think Back, and we're gonna. This is a tool in Thinkorswim. I like that the IV was very low in November, although it did get lower into December, and then it kind of went up. Probably 12.19. I'm actually going to say that 12.19 could have actually been the best day for them. Let's see, because that's when IV down here. This is a little chart that I have, little color-coded IV chart that I coded up for Thinkorswim. Let's see, Apple, and let's go to, so say 11th. Let's choose the 11th, and we did February 102 days. Pretty good. It's pretty good, pretty good. And we did the 265 calls. $106. So we did about 7 of these, right? Okay. And you did it for like, you think you said like, let's like 110 or something like that. All right. So we put in about 7. I think you did 115 because that's ended up about 1,000. Okay. So 7. Okay. So we're going to go forward. Let's do this. All right. All right. So to the 19th. To the 19th where IV got really high. Let's see what our price was. So we were up about $2,000 on that day because we were bullish and implied volatility had pumped up. And so we had $1,000 in and we had a P&L of $2,000. So we were up 2 to 1. Now, when I'm doing standard trading like futures and spot trading, that kind of stuff, or shares, I really want to look for a 3 to 1. But sometimes with options, you have to consider that you got to look for maybe like a 1 or a 2 to 1, and that be one of your potential profit targets. Because I bet you, I'm just guessing here, because IV dropped on 12/26 and we had more days of theta decay. By 12/26, day after Christmas. Oh no, I'm wrong. There we got a 3 to 1. So yeah, either 2 to 1 or 3 to 1. I'm wrong. You would have gotten an actual 3 to 1 on this, and yeah, that, I mean, in hindsight, being 2020, that 3 to 1 was really your target. I mean, that number. In fact, it didn't even necessarily come on the 26th. Let's say Christmas Eve. If you were up $3,000 on your 1,000, not quite, but yeah, on Christmas. That doesn't make sense. I don't think Christmas was open, but definitely the day after Christmas or somewhere in here, you should have, I know, in hindsight, taken your profit. And I'll just tell you right now, I'm not going to tell you what to do, but you're not going to get that. You're not going to get that at this point with the state of decay that has happened. It would take really a miracle, and you can't really trade on miracles. But yeah, now you're down to a little over break even on some of it, looks like, as of the close of the day. Sucks. Hopefully you took some profit on it. But what you have to do with options is you kind of have to set yourself up. You want to look for price targets. I mean, you ideally want to get that option to go in the money because that's when the delta turns to 1 and you really get that acceleration. But also you have to look at it from risk reward perspective, and you want to be a little greedy, but really once you get to 3 to 1 on your options, that's a really good target for you to get to. Not many people get that, but that's a good target. So that's one thing you can do to fix that. That's one suggestion, is kind of set yourself with a risk reward target and go for that, GIG. All right. So let me check and see if we got anything else on the docket. Yep, and if you got symbols to look at, post them into the chat, please. All right. So I'm going to say something just for my own accountability. I made a New Year's resolution not to not talk about Bitcoin anymore, but to not argue with people about Bitcoin anymore. So I watched a few of these videos. Uh, let's see, let me pull them up here. Got by a guy by the name of Mark Meldrum. The first thing that I brought up that was shared to me when I was talking about MicroStrategy, which I do believe is a pyramid scheme, is a much more well articulated analysis of why I believe it is a pyramid scheme. And I've been sharing this on Discord. And let me post the links into the live stream and chats. He gives a very, very good, well thought out explanation of why MicroStrategy, what they're doing is a pyramid. I really liked his way of articulating it, especially at this point, because this is kind of something I would do, where you would just draw something and then articulate, okay, what is it? And the TLDR of this video is that in order for him to continue, Michael Saylor, MicroStrategy, to continue doing what they want to do, which is issue shares and raise cash and buy Bitcoin, is they have to continue to get not just the same amount of money, they have to get more money as the time goes on to keep this thing sustained. Now, so far they've been successful. It dropped a lot last week, and then it had a very good close this week, or for today, actually. But this I took as an opportunity. Since it dropped back on December 31st, back here at the course of the year, I was kind of having a little bit of FOMO because what it has done, let's just kind of clean this up a little bit, the chart, and explain what I'm seeing here. So on a very simple level, if you watch the way that I trade and the content that I make, I look for 50% levels. These are what I trust. And when it came down and hit this level, which is about 328.35, it's the 50% of the rally that started in September up to the high that it made in November. And right around this high was the interview that Saylor did. And he was talking all kinds of financial gobbledygook on CNBC. And it just screamed to me that he's trying to dazzle people, potential investors, with bullshit. He's not doing anything illegal. Everything I think is on the up and up. But he's basically trying to say all these words to make people think that he's a genius. And when people do that, when people try so damn hard to make themselves look like the smartest people in the room, you got to be a little bit skeptical. And technically speaking, once it did not hold this level and got below it, one of the things I like to look for is an underside test of a key level there. And that's what we basically had today. And I can come up with several examples of times when this has come into play. Zillow is one of the key ones that I've always kind of gone back to and looked at. That is where it comes down to its 50% back in 2021, hung around, pulled back to it. I got out of it because I was in at that point. That's why it lingers in my head. And you enter into what I call the valley of risk. And you do not want to be in that valley of risk. There are lots and lots of examples of this as it comes along. And so that 50% is sort of like the line in the sand. That's where half the buyers need to kind of hold it. And so what I did was I took this as an opportunity to add to my short delta. What does that mean? That is, of course, an options term. And that means that I have lots and lots of, well, not lots, several puts going out from this year into 2027. Long-term puts all the way down the chain. And what I'm doing is I'm making sure that I have negative short delta. In other words, I'm betting with puts that are going down, but I don't want to just sit there and let those things expire if this takes a while. So I've actually sold puts against them a little bit closer in expiration, so they have higher theta decay, but not such that they're going to affect the delta, negative delta. So it goes down. So in other words, I have a hedged position, and I actually started today, this morning, with a slightly positive delta as it came up. And that allowed me to roll some of my short puts and get my theta back to where it is. I'm trying to aim for about 100 short delta. I'm not quite there, with about 50 positive theta. And that lets me stay on the negative side of things and not lose money as time goes along. And as I've been doing this, I've been thinking about how to apply this to other things because Palantir is something that I'm long. Oh, and I need to talk about one more thing about what people have been asking me this week about what to buy and when to buy it. Trying not to be mean, but trying to help people out here. But a lot of people have been asking me, like, should I be buying Tesla? Should I be buying Nvidia? Should I be buying Palantir? And I'm like, no, it's too late. Please stop. Please stop. Please stop. I mean, yes, it could go up more. I'm gonna look at Tesla and show you what I mean, but you just can't buy things that look like this. You can't, guys. You just can't. You just can't. Because these being the reason things get to this point, the reason things look like this is because they have a lot of volatility baked into them. And that is a double-edged sword. That means that as fast as this thing's gone up, it is going to snap back just as fast, if not faster. And then you can pick it up. There's numerous examples of this, but like one of the things while I was segueing from the Bitcoin or the MicroStrategy to this was one of my things I'm going to work at this January is taking what I'm doing with MicroStrategy, do like a back test of how do you do what GIG did, which is buy some options, and he bought like 3 months out. But what if we were to buy like a year out? Give ourselves a long runway for this thing to move, and it could take a long time to move. And with the case of Palantir, it started moving basically in the middle of 2023, and it kind of continued that slow move, and then it just launched into the stratosphere in the summer, the mid-year of 2024. And now you're here, you have to already be long. You can't get long now because you don't know when it's going to snap back, but it is. Come on, it is. You guys, I know you've been in the markets more than a year, 2 years, at least, a few. And you've seen this, you need to have seen this pattern multiple times. And for some reason, I need to appreciate the emotion of it because I've just seen this so many times. I know to avoid this. But the reason so many people get caught up is because human nature draws you in to returns. It draws you to jump into something that has been going for a very long time. You can't do that. You have to do the thing that's hard, which is what I did, which is I wish I'd done more. I really only have 200 shares, but I bought them at about $9 a share. And so I didn't buy them here. I bought them back here, back in, mid to late 2020. Actually, yeah, I think it was about here because that was probably, yeah, the Tinkinson pullback right here. But yeah, so in July of 2022, and I've held them all this time and just kind of held it because I had friends that were really into it. And why? It's just a few $100, right? And so that's what paid off. But you didn't know that at the time. But you had, I mean, it was hard. I mean, it comes down. I've lost about, half on this, $9 to $6. That's how money is made. It's with this kind of frustration. Now, you don't want to back hold, of course, but at the same time, once you're down in this region of time where everyone's discounting it, no one thinks it's going to go up, those are where the deals are found. And Tesla had the same thing. And this is the example that I used to try to dissuade my friend who asked me, should he be buying Tesla? It's like, no, you can't buy Tesla now. You can't. You had the last 2 years of endless media articles trying, and I think it was coordinated, that's my conspiracy theory, trying to depress Elon's stock because he took over Twitter. The media did not like that. They still don't like it, but they can't fight it. They tried so hard to talk about how Tesla was dangerous through this one. They got Tesla down to $100. Now, a lot of people were trying to buy into Tesla, of course, in 2021 when it looked like this. Remember that hockey stick, okay? And then what happens when people go jumping into this? Well, they get burned, all right? But then maybe they see, okay, well, it went down. Yeah, we got it good. But, I mean, there's your bargain. But then, of course, as time goes on, you got more. You got up into the 300s. I don't think they've had a split since 2020. They might have. Oh, no, they've had another split. So whatever this is, split adjusted. But you had another run, and people are afraid of missing it again. And so people get so caught up here that they're going to miss out, that they just feel like they have to be in it. And it's just this human emotion that drives traders and investors to make mistakes. And you have to say no. You have to just grit your teeth, just like you would holding something when it's low. You have to grit your teeth and say no to buying something like this, because a stock that moves like this is going to give you another opportunity. So from the point it was at 352, whatever it is, split adjusted, it came down to 100. You got a 66% discount. And then you can pick it up when everyone thinks Tesla's going to go out of business. And that's hard too, because you're reading the news, you're reading the social media, and everyone's doubting it. But that's reflected in the price. That's why the price is low. The price is high on these things because everyone thinks they're the shit. The price is low when everyone thinks they suck. That's why this is so hard. But you have to be disciplined and force yourself to ignore what people are saying about it. You have to say, like, okay, you have to make a decision at a time like this. I want to own this thing. And then you have to come back and you have to say, okay, where do I want to buy it at? And with really volatile stocks like Tesla, Nvidia, or Palantir, you really just have to set yourself a minus 60% drawdown from the all-time high. That's kind of the number that I've been settling on. Give yourself a 60% if you want to be conservative, and then that's when you buy it. And so where do you want to buy Tesla now? You want to buy it at 60%. Now, what happens if it keeps going? What happens if Tesla goes to 1,000? What happens if Tesla goes to 1,000? What if? You still got to stay disciplined. But what is 60% of 1,000? That's right where it is today. And it's a much safer bet when it has gone down that much. This is what happens. Nvidia is another example of this. Everybody, I got to say, Nvidia, I talked about it today, has a nice hold of the 50% and a volume profile node at 126.96. Very nice little weekly candle there in the middle of December. But Nvidia is one of those stocks which just a few years ago, kind of can't see it now, but it had a 66% drawdown off of its all-time high. You got it at a discount. Now, if you bought it then or you bought it now, if you bought it then, you'd be in good shape now, but you would have waited from November all the way until May. You would have waited from November 21 to May 23rd, over almost a year and a half. Yeah, about a year and a half. You would have just sat there, and who knows what you're going to do. You might get pissed off. You might get frustrated. You might, sell the bottom, whatever. And you just don't want to put yourself in the position to be frustrated. It's a lot easier to make decisions when you're out. Trust me. You know this. You guys have been doing this long enough. You know this. It's a lot easier to make decisions when you're out. And so anything that you're looking at where you just feel this grating need to buy it, give it a 60% pullback. What's the 60% pullback on? And that's just a number I'm throwing out there because it's really kind of a conservative number, really. I mean, sometimes these things go down 70, 80%. What was it? Meta, Facebook, when it did its thing, it was Facebook, Meta. These tech stocks, man, that was down 75%. So 60% is just me giving you a number to think about. Bitcoin. People just can't stand to not be in Bitcoin now. They're telling you that it's going to be. I'm not gonna share the arguments anymore. That's what I made it. I made a New Year's resolution to not argue with people about Bitcoin because it was not helping my decision making about it. I want to admit it. I would take ego trades based on arguments I would have in Bitcoin maxi chats, and that was not helping me. It wasn't. It wasn't at all. And so I decided to leave those groups. I kept telling myself I was staying informed of sentiment, but the sentiment they were saying, which finally culminated in being told to have fun staying poor, was not helping me. I said it was, but really it was just I was getting the dopamine hit from keyboard warrioring, talking about how this deflationary currency was not really going to change the world of finance beyond what it has already, which has revolutionized the industry of fraud. And so I decided to leave those spaces and be more objective about it. And the objective truth of Bitcoin, when to buy it, at this point or at any point in the cycle, is to wait for about a 60 to 70% pullback. Why do I say that? Because the last all-time high goes down to 77%. The all-time high from 2017 down to 83%. The all-time high from 2013 down 87%. And then down here, I mean, all these big runs that have happened throughout the entire history, 81%, or let's say 75% here, all these runs through history, this is a very volatile instrument. That's why people like it. People like the gains on volatility. But volatility is a double-edged sword. And so if you, at this point or at any point, what you want to do is set yourself a limit order from the all-time high, minus 70%. And if it makes a new all-time high, you just sit back and you don't FOMO and you just let it do its thing. And you just update your limit order from minus 70%. Give it a year or two, probably somewhere in 2026. That's what most people are saying. You know, people are aware that this bullish cycle is going to come into this year based on the historic happening cycles. It's going to come into this year, but at some point in this year, we don't know what month, it's going to top out. Could have already happened. We don't know. It's a wide range of things. But it's going to sell off, and it's going to come down at least 70%. And you can bet on that. And so, yeah, it's going to be a lot better to buy 3 Bitcoin for every 1 that you could buy now in that time period. And I'm not going to let anyone tell me otherwise, because that's what I can see with my own eyes. And that's what is the truth. And all the narratives that say that that is not correct, well, we'll see. I know what I've seen over the 15 years that I've been watching it. So, all right. If you guys got symbols to look at, post them in the chat. I'm going to try to keep this thing under an hour because it seems like people really feel it easier to digest that much when they see it. So I like people to see as much as possible. Hey, what's up, matey? Could you kindly share your insights on Doge BTC, your perspective? Well, thank you for asking my perspective. I think that those are fun. I don't think that those are investments. I think that a lot of people enjoy these things, but they're not going to be a very good thing in your, let's say, retirement portfolio. They're fun to play, but you have to kind of play the musical chairs game. That means you have to get in and get out at the right times. And everything is going to be tied to Bitcoin. When Bitcoin catches a cold, every other crypto is going to catch a plague, I guess you could say. Or excuse me, when Bitcoin sneezes, every other cryptocurrency catches a cold. And so I think Doge is fun. It's a fun thing to play. But I try to focus on assets that produce value, like companies. That's why I like stocks. They actually participate in the economy and create value for their shareholders rather than just go up based on what people are willing to pay. Yeah. Ethereum is another one to look at that's doing some interesting stuff. It has pulled back to the 50% of this down cycle today. Let me just clean this up. So what it did was it came up to its 50% for the rally. The rally began in November up to the high here. And there's that 50% level that I love so much. And now it has come to close the week at its 50% from the top side. That's what it needs to break, but it is at a resistance. And so, again, it's going to be a lot of it predicated on Bitcoin's performance. We'll see. It ended the week pretty strong, but like I said, I'm being very easy going into January. I want to see what this does. And to that end, let's talk about the stock market a little bit. So I got asked today, what are we doing about the stocks? I am being patient. We had a nice update today, but I don't like that we made a lower high there to finish the year. I mean, a lot of people talk about the Santa Claus rally. I have my own definition of Santa Claus rally. I don't think it's to last 5 days. I think the Santa Claus rally is basically within the last part of Q4 is what I call the Santa Claus rally, because that's really when I tend to see this a very sustained upward movement and to really watch and really play. And it doesn't start in December. It starts before you start putting up Christmas decorations. Actually, the Santa Claus rally, I note, started on November the 19th. And it basically lasted because that was, again, at the time, I'm looking at futures, by the way. We could look at it SPY, but I prefer futures. That was when it hit 50%, held it nice strongly, and launched a rally into about early part of December. That's the funny thing about people having these sayings about Santa Claus rally happens then. You got to kind of play a little bit off base and kind of understand that it can happen early to kind of fake people out. And so the Santa Claus rally went up, but then you had a big old sell off there. I'm not saying it makes me nervous. I'm not saying it makes me worried. It just makes me cautious. And so I'm going to keep watching and seeing if we. I'm not sure what I'm looking for yet. I'm really not. I don't have something to tell you. This is a wonky chart. There's no 50%. The volume profile level for this range is. Let's clean this up and let's just see where it is. It's kind of far down here actually. It's all the way back here in the October price ranges. But so really, I think if we start getting to about 58.40 on futures, let's see what that is on SPY. That's going to be about 570 SPY. I feel like that's going to be the type of move I want to really see. The reason I didn't buy into this dip right here is because what I like to look for is those minus 5% pullbacks on the stock market, on the SPY, that you get about on average about 3 times a year. And we only got to 4.26. So I didn't buy then. And that served me well because once again, we didn't really get up to make a new all-time high, and then we had another here. So I really feel like a pullback down to 570 is more deeply into where I want to see. I'm rubbing my hands together because that would really, really interest me. That's when we start getting into the territory where people are like, oh no, maybe this year is going to be bad. And then, of course, we have to make sure that January closes positive because that is statistically how the year goes. So stock almanac January effect. Let's talk about that. So now let's see if Google AI is what I think it is. January effect of stock almanac refers to a historical pattern where stock prices, particularly for small cap, tend to rise. No, hold on. That's not it. So as goes January, so goes the year. Statistics. Sorry, I didn't have this in my. Here we go. Sorry, I didn't have this in my pre-show ready for you guys. So, all right. So basically, the hypothesis. Okay, the idea of January barometer. There we go. Was devised by Yale Hirsch in 1972, Stock Traders Almanac. Which, by the way, I need to get a subscription to this, even though I'm not going to follow it exactly. I remember we used to have this in the office I traded at, and it's a cool thing to read. Stock Market Almanac. It basically talks about in this month there's this chance of this, blah 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 blah. It's cool to read, cool to know. But these are kind of things I remember from this almanac that kind of stuck with me that work. I mean, I like probabilities like this. This hasn't been updated, but proponents of this view will cite data showing the January barometer effect has registered only 11 errors. In other words, only 11 times it hasn't been true between 1950 and 2021, giving the indicator an accuracy rating of 84.5%. But take it with a grain of salt. But let's just look at basically the premise is this: if January ends up, the year will end up. That's basically the premise of it. And so, what happened? Let's look at months. So last January of 2024, nice little blue bar or green bar right there. Let's just highlight that. So there's January of 2024. And then let's go back to 2023. 2023. Not such a nice February, but there it was. And then let's see. January 2022. Red bar. That was that down year. You guys remember 2022? Remember that? I think we pretty much forgotten about that. We've been very, very bullish up to this point. What about 2021? 2021, January, this was an error. This was one of those errors. It actually closed down, and 2021 was a bullish year. And then 2020, another error. 2019 was positive. So, like all statistics, they are just that. More often than not, in other words, if I'm just going back, they did the 2022 analysis that showed that it had an 84%. 2022, they probably didn't do. Yes, it predicted it. Yes, it predicted it. Yes, it predicted it. So actually, it's probably in the high 80s% as a predictor. I'm going to go with that as why I'm cautious in the month of January to see what it does. I think you could logically say that this is because people are, setting their positions, the sentiment's kind of coming in, people are making their decisions for the long term, and yeah, it's going to be something that I really look at to see what happens in this year. So, what's up, Jeremiah? AMD, people have been really trying to get me to give them the go ahead on Nvidia. But as far as tech stuff goes, the thing I don't like about AMD is it's breaking that 50%. It's just not the kind of structure that I want to see. I really would have liked to. I think we talked about this. I would have liked for it to held 140. Let's see in here on the leg up. Got a volume profile level down there at 107. And then in the longer term, a little bit further down. But yeah, just kind of hang out and see what it does. I hope it goes up for you, Jeremiah. But 107 is maybe what it tries to find. That may be where it tries to find some volume, some trading. So just kind of look at it till there. Make sure that it holds that. All right. Let's look at some. Let's go ahead and get the symbols in for you guys. Like I said, I'm going to try to keep this under an hour because that's what the algorithm seems to like. I really have to say, I'm far more interested, and this is what I told my friend. I'm far more interested in getting into Intel. I still own it from, back in, I think about, what was it? Like maybe September, October, whatever it was. I think it was on this pullback here. So I'm still down from about 21 on here. It was wherever the Tinkinson pullback. Yeah, so basically this Tinkinson pullback here at about 2161 looked like a really good level for me. Maybe it's making a double bottom. We'll see. But I feel so much more comfortable in something like this than I do in a stock like NVIDIA or Palantir or Tesla, which is run and run and run. By the way, I do own a lot of Tesla, and I did some covered calls. Actually got out of them. I sold covered calls when it did this little number right here back on Friday, December 20th. And then, of course, I closed those out when they were about 60% premium received. I'm looking for Tesla to get up to maybe 420 again, LOL, or possibly 430. And then I'm going to put another covered call on it to capture some premium because Tesla is still has very elevated implied volatility. Very good for option selling at this point. So, yeah, I think I'm going to be a lot safer selling premium than when I was last year. And I got myself in trouble because I started getting into this yeet right here. Finally had to capitulate on my covered calls there. What's funny is I had 280s out to March, and who knows, they could have actually come down. We'll see. But I learned my lesson. I learned some lessons from that. All right, let's look at, let's see. Oh, so Meta. So you asked IMGIG. So you picked up, well, GIG, let me see if, can I implore you to try to buy shares on things? So you picked up 117,600 call. So you're playing weeklies. I mean, I'm not sure how to answer. Is it you're broke? So why are you spending money on lottery tickets? That's what weekly options are, bro. I mean, what stop being poor. Like you said, you're broke. Stop doing poor people things, which is buying lottery tickets. I mean, the lottery is a tax, basically, by the government here in the United States. They don't let people do their own lotteries, but the government can. The lottery is just an extra tax on the poor and the poor at math. Okay, your probability for winning on weekly options is just. I'm just going to be honest and blunt with you. You're just not that good. Okay, I know a select few people that can trade weekly options, and they are there's two things that really makes them stand out. One, they are incredibly emotionally disciplined, which far beyond what I am. I've never seen them mad. I've never seen them sad. I've never seen them overly happy. They're just even keeled. They also make high six figures on a regular job, not trading, and they just do it for fun and some extra money. They don't have to worry about money, and those are successful weekly options traders. I don't know any others. I don't. And so, unless you're those things, if you're telling me that you're broke and you're playing weekly options, just just chill. Just buy stocks, buy shares, and be patient. I know it sucks. I don't know what your personal financial situation is, but having some is better than nothing. I know it must not seem that way. I don't know. I'm maybe I'm out of touch, but at the end of 10 years, maybe you'll double your money. And that sounds like so far away, but otherwise you're just going to have zero. And it just logically that doesn't make sense to me. But I guess in people's minds where they want the money now because they don't have enough to fill their needs, then or maybe it's a fun thing. I don't know. You tell me. So I think you should be considering buying shares. I mean, you had a good play there with that Apple. Okay, but I don't like to hear that you're picking up, weekly options, or in this case, I mean, it's not a weekly option, the 117. It is a monthly January contract, but you're already in this 15 DTE window, you know, and yeah, you're up 300. I mean, but remember what we were saying? You had a 3-to-1 on your Apple, okay? So you're only up point 0.3 to 1 or point 0.2 to 1 on this. That's not a recipe for success. I mean, look at what happens to options. Anyway, I'm going to do the symbols. Just think about what you're doing, buddy. All right, so PFE. PFE, I like. I do Walt. I do Walt. I'm still kind of hanging on. I'm hodling because it is another stock that's at a multi-year, 20-year low. When's it going to come back? I don't know, but we're going to hang out in it. Same thing I've been doing with Disney. You know, sitting around, and finally Disney's kind of coming up to the top of the range. I mean, it's just kind of hanging out, but I feel a lot better about a stock like this than buying into a Tesla. I know that when I say that to people, they look at me like I've got, two heads. I'd rather be buying Intel down here, or I'd rather be buying Pfizer. But really, like, do you not get it? Do you not understand that this is literally cheap versus being expensive? I can't help but go back to my experience with ExxonMobil, or oil in general, which was another just battered down industry and stock. I thought I was too late buying ExxonMobil at $49.50. This was back when the EV was the craze, and you had to be buying EV. Remember? Remember when Plug Power and all those things that are now just I mean, yeah, look at this, guys. Like, can you, like, in hindsight, can you believe that people were throwing life-changing money from their savings into something at this point? Just now, it's just so, it just looks like, oh, what a horrible thing to do. But that's because that's what people were telling. And so for some reason, people chase returns and they just feel drawn into it. And while this was going on, the narrative was EV is the next thing, whereas oil companies are going the way of the dinosaur, and they were incredibly depressed. So the only thing that was cheap in 2021 was oil sector stocks, and that's how I kind of found it. I was like, oh guys, it's 2021, the market's up so high, what can I buy that's cheap? And the only thing out there was oil and oil futures, USO, and oil companies. And everyone, CNBC, Jim Cramer, YouTube personalities, they were all just beating down oil. And it was really kind of a formative experience in my trading career because I thought I was crazy. I gaslighted myself. Like, why is it that ExxonMobil is trading below its book value? Don't really use that, but still, I looked at, how much ExxonMobil would be worth if they sold all their equipment, even handled all of their debt. It was still less than the current share price, which was 47.50. And so I bought. And I was like, well, this makes. I mean, it's the only thing that's cheap. This makes sense. Let's see if we can get some movement in it. And what happened? I mean, you can't go chasing. You can't go chasing stuff. You can't. You got to let it go. If you didn't get into it, there's going to be another run of something. I mean, eventually, this market's going to come down. I'm not saying it's going to crash now or this year, but eventually, it's going to give you a big 30%, 40% haircut. It will, maybe more. There's no reason not to be patient. I'll talk more about what I think about the money on the sidelines out there, but I'll say, oh, what's up, Beach Ball Trading? Good to see you. Thanks for the call outs on Twitter. All right, so let me go through the symbols. How is it going to perform? Well, I don't know how it's going to perform. Rivian is another I actually like. Again, it's cheap. But I think it's up big today because they had a good delivery number. And honestly, if I was not happy with my Tesla, I would definitely get a Rivian truck for a truck purposes because the Cybertruck is ugly as hell and doesn't really serve the needs of a truck. I wish that Elon would have just either bought Rivian or made trucks that look like a standard truck. Okay, don't go crazy with the aesthetics because you can't see out of it and it doesn't have a very good bed. I wish that they had a Tesla truck-looking truck, but they don't. But I was traveling for the holidays, saw some Rivians charging at the Tesla superchargers. They're out there, and they're hanging in there, hopefully. But this is the kind of bet that you have to make. You have to be able to willing to say, like, okay, it's questionable if this company is going to survive. It's questionable. There is risk. You have to take risk to get reward. It takes no courage to buy something like Palantir that's gone up this much. It's gone up what? Since the hard times when, I was just really buying it because friends were into it. I didn't understand it. It's an AI military play. Okay, cool story, bro. 1,000% from, well, I didn't get it at 7. I got it at 9. But close to 1,000% over the course of 2 years. Again, going back to your GIG, big money, the money that you feel like you need and you want, it's not going to be made in a week. No, there's no way. Even the people that have made millions, multi-millions of dollars on GameStop or Tesla that you've read about, they've done it with options, but over the course of a year or two. These long-term leaps is what they're called, okay? So notice how you did good with your 3-month Apple play, but now you're playing weeklies. You're throwing $1,000 into it. You're making $300. Where are you gonna go there? You're gonna make $300, and then one of these days you're gonna lose all 1,000. You're gonna have to win at least 3 times for every one loss that you take on. I liked your Apple play a lot better. You just had to kind of have a set thing in your mind, a 3-to-1. Realize how that's a 3-to-1 in reverse in the good side. But yeah, so I liked your Apple play because it's long term. Long term options if you're going to play them. I don't like weeklies. I do not like weeklies. I've just seen so many people get hurt by weeklies. Just don't see people succeed unless they are very, very specific of a type. And PayPal. Gotta admit, I've been kind of negative on PayPal, but it is starting to rise. I mean, maybe it's going to have some recovery. Again, this is not a bad thing to pick up because it is a volatile stock. There's no reason why it can't get back up to its high over the course of a few years. And that's kind of the key thing there. Like, I want to make it clear, like, whenever I say that I like something, I don't hope people aren't going out and buying, like, a weekly option on it. Because I'm thinking, like, long-term perspective. I mean, like, let's say 2-year horizon is what I'm not going to say I'm like a 10-year horizon person. I'm not going to claim to be that. But, I mean, I've seen enough good long-term stuff happen in a 1 to 2 year time frame. That's what I want to aim for. And you don't even have to do tech stocks. I mean, Costco just keeps winning. What else were good winners of, LLY? It's kind of holding out. I've had this for many years. Something boring like waste management. I mean, that's a pullback there. I own it for a while. Truist Financial held the 47. But we'll go through this a little bit more. As I said, I'm getting into that 1 hour mark, so I'm going to close it up. Quick thing for Zishan. Hymns. I think you posted this a little bit earlier. I like that 50% pullback there. Yep, that's a good one. I think these guys sell, what is it, ED stuff in addition to other stuff. 24.22. I like it. DHR. Zishan has been paying attention. Zishan, do I know you like from years ago? Because I knew a guy named Zishan that I used to trade with from Canada. It's not you, is it? GWW. Oh, good stuff, man. Good stuff. Good stuff. I'm gonna write all these down. These are good plays. These are good 50% plays. At least hub. That's 50%. Could pull back to 50. I like your first three for sure. Those are good. I'm gonna write those down. All right. Thanks for stopping in, guys. I think I covered everybody's points, and I want to keep it down for the algorithm so that these things I talked about, which I think are important, can get out to people. So have a good weekend. I'll be back next week on Friday. Okay, Zishan. Well, I just knew it. It was a good friend of mine from Canada. I haven't talked to him in a while. Didn't know if you found me. But yeah, guys, make sure that if you liked everything, make sure you leave a like and go to my Discord. And I'm going to be, my New Year's resolution, I'm going to be posting more trades. I'm going to be more active once I see them on there. I've been a little slacking at the end of the year. I'll be honest. It's because I didn't want to pay anything else in taxes for 2024. But it's a new year. So a new tax year, a new year for me to generate some more money for the U.S. government. So we'll see you guys later. Very wisely.